Hi, Steve here with a special market update. Now that the markets are at new highs, give you levels to keep an eye on to see if this breakout is indeed valid or not. So let's start with the S&P. As you probably know, we were looking at this negative signal here. This was the abandoned baby top. The gap up, the gap down. This is actually a rising window and a falling window. It's very small, and almost a doji session here forms an abandoned baby. Even if you weren't aware of that very unique candlestick signal, most of us would recognize this as a shooting star, and it was confirming resistance. And indeed, notice how this zone here became resistance a couple of weeks later, and the market obviously had a big sell-off. Okay, then we had an inverted hammer. It's like a shooting star. See, the shape of the candlestick line is the same, but it comes after a downtrend, and you need bullish confirmation on an inverted hammer because the long upper shadow is actually negative. So you do need at a minimum a higher close or a higher action in the next session, which we did via a gap. And the market hesitated a little bit. There's a long-legged doji, long upper and lower shadow with the doji here, confirming a resistance area. So let me draw that. So I'll make the resistance zone here to over here. And notice how the market got near there, stalled, a little dark cloud cover here. But now that the market is above what was this major resistance area, what should happen is this old resistance should be support. And I'm doing this recording after the markets closed on the 22nd, November 22nd, okay, Tuesday. And notice something interesting. This old resistance, at least as of the action today, has become support. So a way to trade or play this for momentum traders, in other words, who like buying on breakouts, okay, this old resistance should be support based on a close. So I would give it down to maybe 2180. If the S&P closes under 2180, then there's a chance that this would be what's called a falling off the roof, a false breakout. In other words, the market broke above resistance and could not sustain it, and that would have short-term negative implications. But for now, this old resistance held as support. The only concern I would see here is the market is a little bit overextended, and what would be healthy is actually if the market trades sideways for a bit to relieve the overbought condition. There's two ways to relieve an overbought condition. You could have a big sell-off, or you could do it by price. That is, in other words, as I just mentioned, you could have a big sell-off, a large percentage sell-off, or you could just digest the gains by trading laterally for a period of time. Let's face it, say the market was down here at, let's round it off to 2100 or 2090 a couple of weeks ago. It's all the way up at 2210. So some investors or traders may be saying to themselves, oh, the market's rallied too far too fast. I'm not going to do anything here. I'm a little nervous about a correction. But if it hovers around this range here, these people will get comfortable at these higher levels. So that's what we mean by relieving an overbought condition by time. Okay, what I've done now is we made a weekly chart, and let me get rid of the resistance area here. And this is something I did back in the 90s when the market was in uncharted territory. How do you get resistance? How do you get a target when the market's at new highs? So a typical resistance line is a falling resistance line, but what I do is make an ascending resistance line. So it's still bullish, but it's an area where the markets could see some selling pressure, some profit taking. So I connected the high here and here. See over here? And interestingly, notice where the market had some issues with this doji. Again, I wouldn't view this the same as a falling resistance line, just an area to think about taking profits in any rallies. So right now, based on this, my next target, assuming that change of polarity holds, would be up here. Now remember, this is going to be increasing week by week because this is an ascending line, would be towards the 2275 area. Okay, now let's look at the NASDAQ, or the composite. I like the S&P better than the Dow, so I really don't like discussing the Dow, although it's on the news a lot. The Dow is so narrowly based with so few stocks compared to the S&P. But for those who like to look at the composite, same idea as the S&P. The market has broken above a key resistance area, and now this old resistance, and this actually has a little bit more of a zone here. This old resistance should become support in this zone here. So keep an eye on that. If the market closes, I would say, under 5,300, then that would be some cause for concern. And similarly with the S&P and all these other markets that have had very sharp advances, ideally you'd like to see the market digest the gains to get comfortable at higher price levels. Let them trade laterally for a bit or even a little bit lower. And for you long-term historians out there, this is a yearly NASDAQ composite, and we moved above it. This is a monthly, so we need a yearly. Actually, let me do a monthly. Let me go back to a monthly here. Let's see. And what I'm going to do is compress it. Okay, here we go. Obviously, a little hard to see the candles, but here's a monthly. And I'm going to draw another line here. Whoops. Okay, so in this monthly chart, the highs here in 2000, and then recently, recently comparatively speaking, back in 14 and 15, this resistance area, the market got above it. So what I'm going to do is kind of expand it here because I want to concentrate on this area here. Alright, so you see how this old resistance became support. It got a little under it, but didn't close under it. So as long as from a longer term perspective, monthly close above 5,000 keeps the long-term trend intact. And what we could do with the NASDAQ is actually view this as sort of a box range from 4,200, let's say 4,250 to 5,250. So it's 1,000 points at 1,000 on the breakout, and you get an upside target of 6,250. Again, very important that on any corrections on a monthly close at the 5,000 hold. Okay, and we can do something similar to the S&P. This is a weekly S&P. So let's look at this. So let's say around 1,800, lows here to here, and over here, and over here. So essentially, this area here is a box range. Now, normally, we look at the change of polarity, old resistance becoming support, but the market did get under on a weekly basis, but it was such a short-term correction and we came right back up. If we still want to view this as a box range and get a target, we go from 2125 to 1825 at 300. You add 300 to 2125 and you get a potential upside target of 2425. So this just shows the importance of a couple of things. One, using Western technicals to get price targets, and also a way to use candlesticks to trade with the momentum, because candlesticks can be used, candles you could use as a resistance area, like over here, and once the market gets above resistance, that could be used to trade a breakout. And then, as I mentioned before, as I showed earlier in this market update, you could use the change of polarity to set a protective stop. And just as a quick heads up, some of you may have seen the email we sent out today. Look for additional emails, but we are going to have a Black Friday event that's actually taking place now. And what we've done is we have our most popular educational and software packages available, all at special discounts. And also we have a private invite for those who invest in any of these educational or software packages to have me analyze any markets of your choice, and lots of other cool bonuses. But you have to order by Friday. For more information, just click on the link below.